So let's be clear from the start. This is not about Tesla, the company. It's not about Elon Musk tweets. It's not about EV deliveries next quarters. It's not about price targets from sell-side analysts. This chart is about market structure. And if you understand what this chart is showing you, you understand something most investors still do not, because Tesla is not trading randomly. Tesla is not trading emotionally. Tesla is trading in cycles. And those cycles are visible, measurable, and repeating. Let's walk through exactly what the market is signaling and why the next move could be far larger than most people expect. So this is a weekly chart, not daily, not intraday, not 5-minute noise. Weekly charts stripped away emotion. They strip away headlines, and they show institutional behavior. Pension funds, sovereign wealth funds, endowments, long duration capital. People that are in it for the long haul. Weekly charts are where real money leaves footprints. And this weekly Tesla chart is going to show you footprints that are unmistakable. Look closely at what Tesla has done repeatedly. You see it here, and here, you see it here and here and here. Look what's happening, right? Large rounded bases, extended period of consolidation, then sharp, violent breakouts. Higher, obviously. This is not random, right? This is a classic accumulation behavior. Institutions do not chase price. They accumulate during boredom. They buy when retail people like you loses interest, and they buy when volatility collapses. And then when supply is exhausted, price explodes. This is exactly what this chart is showing you. And it's a great chart if you think about it. Now let's talk about the horizontal line. These are not trend lines. They are not moving averages. They are market memory levels. Every major breakout in Tesla begins the same way. First, you build a base, you test resistance repeatedly, and you finally breaks above it and never looks back. Look at the first base, breakout. Measured, move higher. Look at the second base, breakout. Measure, moves higher. Look at the third base, breakout, measured, move higher. This is textbook price discovery. And price discovery is where valuation stops mattering. Now focus on the right side of the chart. Tesla spent months, not days, not weeks, months building a base, right? A deep, rounded structure, multiple failed breakdown, strong downside rejection. That tells you something critical. Sellers are exhausted. If sellers had control, prices would not stabilize. It would cascade lower. Instead, price held. Volatility compressed. Volume dried up. This is accumulation. And then the breakout. Now let's address the number everyone is focused on, 520. This is not random upside target. This is not wishful thinking. What is that? This is a measured move. Market moves in symmetry. When price breaks out of a base, the most common move is base depth, added to the breakout level. This is exactly what this chart is illustrating. Same math, same structure, same behavior. And then the market has already confirmed the breakout. So why is Tesla a liquidity stock? Here's the best part. This is a part most investors miss. Tesla is not trading purely on fundamentals. Tesla is trading as a liquidity proxy. When liquidity expands, Tesla outperforms. Tesla leads. Tesla overshoots. When liquidity contracts, Tesla underperforms. Tesla corrects violently. Tesla resets expectation. This is not opinion. This is not an opinion. This is observable. Tesla is long duration, high beta, narrative driven, momentum sensitive. That makes it extremely responsive to financial conditions. So what does this matter micro-wise, right? Well, we're in a market environment where rate cuts are being discussed, liquidity expectations are shifting, and risk appetite is creeping back. Markets do not wait for rate cuts. Markets front-run liquidity. Tesla is telling you that risk appetite is returning, not everywhere, not evenly, but in high beta leadership stocks. This is when people get destroyed. This is Tesla at 400 plus. They say, oh, it's too late, it's already run. That thinking is exactly why institutions wins all the time. Breakouts are not tops. Breakouts are beginnings. Most of Tesla historical gains has happened after it felt expensive, after it broke resistance, after skepticism peaked. Price do not move because it is cheap. Price moves because supply disappears. So notice something else. Volatility collapsed during the base. Weekly ranges tightened, right? This is not a weakness. This is energy being stored. Markets move from compression to expansion. The chart is transitioning into expansion. So why this is not a straight line? Well, let's be realistic. Tesla will not go straight to 520. There will be pullback, shakeouts, false breakout and all that. But ultimately, looks like the next move is up. Take a look at the recent, maybe it's time to put on some short-dated call options. Now, what would invalidate this setup? Well, this is critical. Every thesis needs invalidation. Well, this could set up if Tesla loses the breakout level decisively, weekly closes fall back into the base, momentum completely unwinds, and absent that, the trend is intact. So why this Tesla matters beyond Tesla? Tesla is not just Tesla. Tesla is a signal. When Tesla breaks out, growth sentiment improves, risk curves steepen, capital rotates towards momentum. Watch what happens next with semiconductors, AI infrastructure, high beta tech. Tesla often leads, not follows.